Good morning, traders. It's Tuesday, the 30th of May. I'm Joe from Signal Centre. Hope everybody's doing great and enjoyed the long weekend if you got one. If not, let's get into it, shall we? Let's go through the latest headlines, what's been moving markets over the past 72 hours or so, have a look at some charts and set us up for the week ahead. If anybody's got any requests, any markets that you're looking at or would like a second opinion on, please feel free to post them up in the comments and we'll get to them shortly. Steve may be joining us today, but if not, I'll just crack on and he can join when he's ready if he's available. Okay, so latest headlines, let's do that first. So the inflation data that came out on Friday was higher than expected, which is a little bit concerning, and we've seen a bit of a theme of this of late, that inflation is becoming a bit sticky and not really abating at the levels or the rate that we'd hoped. The US PCE prices index increased 0.4% for April, with the year-on-year rate increasing to 4.4% from 4.2%, which is way above the expectations of 3.9%. The core index increased 0.4 compared with the consensus forecast of 0.3%, with the year-on-year rate edging higher to 4.7 from 4.6. Morning, Steve.
Morning.
How you
You
doing?
all right? Yeah, good, thanks. Sorry, mate.
Good, that's all right. Let's crack on then. So shifting the Fed funds futures, after the PCE prices data on Friday, there was a further shift in the Fed fund futures, with the market pricing in around a 60% chance that the Fed will lift interest rates to 5.5% at the June policy meeting. We've also seen some progress on the US debt ceiling. There's been a provisional agreement made over the weekend. US President Biden and House Speaker McCarthy announced they had reached a provisional deal, with the Republicans agreeing to raise the debt ceiling in return for spending cuts. As a result of this, we have seen a slight improvement in risk appetite. That's improved slightly after the debt ceiling deal. There were still some concerns that the deal could be blocked by Congress, given that there is opposition to the deal from the left wing of the Democrats and the right-wing Republicans. The dollar overall has held a firm tone. Higher US yields and the shift in the Fed funds futures rate have continued to underpin the dollar, and the US currency is posting fresh 2-month highs this morning. We've got some Chinese data today. The latest PMI, sorry, this is tomorrow. The latest PMI data will be released on Wednesday. Consensus forecasts are for manufacturing to remain in contraction, with a slowdown in services sector growth. So that's it for the headlines. Let's get into some charts. So, Steve, are you ready to take a look at Bitcoin? Do you want me to take a look? Are you good
No,
to
it's
get?
all right, mate. All good. All good in the hood.
Cool.
I'll dive straight into it. Okay. Bitcoin, really, the main chart to be looking at the moment is the weekly chart. We have got a potential for this inverse head and shoulders formation to really play out nicely. We had the breakthrough of the neckline, 25,400. We had the rally up to 31,000. The measured move target for this was 35,000. So it didn't quite get there. And we've had a pullback, but we've had a pullback. We haven't actually managed to pull back below the 25,400. So that's looks pretty positive, especially after these last 3 weeks of price action. You had this bearish week, the week of the 8th of May, a bit of an indecision the week after, and last week was a lot more bullish, and so it's reacting. We're reacting off this neckline. So overall, sentiment for cryptocurrency remains slightly positive since we've had that sort of rally since the end of November, start of the year. Actually, should sort of take a little look at levels to watch on a short-term basis. We had a spike up over the weekend, got up to a high of 28,450. So that's the level to watch on the top side. We do have this downward trending resistance line, which we've broken up above a couple of times. We can actually probably redraw this line, and you can see that I've got a potential downward trending resistance line coming in a little bit higher now, 28,500, just above there. And a level to watch on the downside is around about that 25,850 level of support. So at the moment, we're above the Ichimoku cloud on the 4-hour chart, so it's trending slightly higher on a short-term basis, but plenty of resistance up above. A bit of a battle the bulls will have to do to get through there. On Ethereum, the supportive level comes in around about that 1730 to 35 area, and we did manage to get down last Thursday to 1760 before a nice impulsive rally higher on a short-term basis, took out resistance at 1872, and we've now stalled around the 1930 area. Pull back from there, looking quite positive going into this morning. So again, on a short-term basis, Ethereum looking quite positive. XRP has broken up through the downward trending resistance on a short-term basis as well, this 4-hour downward trending resistance line. We've been poking our head above it all the way from Friday, all the way through the weekend, and we've pulled away from that level and looking very positive indeed. 50 cents is a more of a psychological level. No other. We did have it form as support back in early in April, but the next levels of resistance from a horizontal basis are around about 54 to 54.75, and above that we've got 58.5. As I say, down below probably 41 cents is the level to watch on XRP. Commodities. Dollar has taken a bit of a hit. Let's take a look at the weekly chart to start with. We've seen now 3 negative weeks of price action after stalling in front of the all-time highs at 2067. That was the week of the 1st of May, and a nice breakdown lower. We are testing some sort of support around the 1935 area, just trading slightly above that at the moment. This is a definitely one to watch, especially with that dollar strength that we're seeing in the markets at the moment, all the way up at 104.42 on the index. But breaking down nicely, and real sort of like test here, 1935 is a bit of a line in the sand. If we can manage to break down below there, close below there on a daily or a sort of longer term basis, then that is pretty much put a top in place. We can see what sort of price action that's happened before when we've got to these levels on the weekly chart. We've spent 1 week really sort of like pushing higher, but we've posted another lower high. So and we can see what happens after that. Normally we get a retracement back towards 1680, that sort of level. 1615 we got down to before, but again, same type of formation that has formed, and so the pattern potentially continues. Yeah, let's watch that 1935 level and see if we can get a break. Obviously, dollar strength will lead to that. On the oil's had a little bit of a uptick really since since the sort of spike down from 4th of May. Really saw the rally back to around about that 73.57 level. That's acting as a bit of a pivot level at the moment. We've got an upward trending support line coming in around about the 71.60 level, resistance at around 74.60. So there are a few levels to watch on the upside, but at the moment crude oil looking quite firm really overall. Natural gas has had a bit of a pullback from the spike higher that we got on the 19th of May. We've had the pullback now, and we're trading around that 235 level, which has been, we've seen lots of price action going on in there before. This slightly negative on a short-term basis. The support all the way down around about the 205 level. We're sitting nicely at 236, somewhere in the middle of where we've just been to and where support lies. So little bit of just wait to see how that plays out now. If we can get a reaction higher into retest that resistance, or we continue lower. Yeah, that's about it on the commodity side. Maybe we can take a look at the dollar a little bit more closely with Joe, and then crack on from there.
Thank you, Steve. Okay, so this is the dollar index on the weekly time frame. So we know that the dollar has been on the front foot for the past few weeks, following this engulfing candle we posted on the week beginning the 8th of May. Since then, prices have continued to move higher over the 3 consecutive weeks, potentially 4 this week if we can hold on to these gains. But looking pretty strong indeed. So above this, we've got a 38.2% fib level at 106.15, and the potential to complete a double bottom pattern if we can break through resistance here at 105.88. So still plenty of work to do before we can get too excited about that, but certainly it is very much on the front foot and looking pretty strong at the moment. Let's take a look at that daily, because there are some more local resistances that we've broken through as well. We had one at 104.20. We can see their prices stalled into that area in the short term, but now pushing through that to begin the week with a gap higher today and fast approaching a 78.6% fib level at 104.80. So dollar looking very strong, very robust at the minute. and continuing to push higher. Obviously, that's having an impact on other markets. So let's take a look at Euro US dollar. That's making fresh lows this morning. And we can see here, really, since this 4th of May attempt at trying to break through resistance here, prices have been on the slide ever since, with only a limited amount of pullbacks being seen in the process. So we've got a big bullish channel here that was in place. That broke down on the 16th of May. Prices continuing to slide lower. The 61.8% fib did almost nothing in terms of acting as support. And now we are fast approaching a 78.6 again at 106.40. Again, potentially a double top forming here, and it is only potential because we need to break through the neckline before we can do that or complete that, and that comes in around 105.31. We can see here there is a number of support levels that are going to be pivotal on the setup here for this particular chart. If this level fails to hold, then it's likely we're going to complete this double top and we are going to project much lower prices over the medium term, but we're not there yet. And there is every chance this level will be defended by the bulls because, as we can see, it is a pretty significant level. So let's see what happens if and when it gets there. But certainly in the short term, it looks very much under pressure. But given the sharpness of this move lower and the fact there's been no real correction, suggests that maybe we could see some sort of corrective bounce in the short term prior to any move down to this level, which ultimately I do believe we will see. Okay, let's move on to cable. Let's take a look at that. So this is potentially forming a bit of a top as well. We've got support at 123.44. Seem to be holding for now. We did see a close below that level on Thursday last week, but a minor bounce back. But ultimately, it looks as though we have seen a break of trend and potentially a short-term top form, and therefore that could suggest prices are going to move lower into this area of support between 117.92 to 118.58. So looking pretty negative there as well. A couple of requests coming in for various currencies, and again, it looks to be quite heavy on the Japanese yen. So going to look at Aussie yen, going to take a look at sterling yen, and also going to take a look at dollar CAD. Let's start with dollar CAD. So prices here have been pretty sideways and choppy for a period of time here. So we can see there is a sequence of higher lows that are in place, and every time we've reached this level, it has triggered a decent bounce in price. In the short term, though, we can see there's some pretty stiff resistance around 136.47 that started to form. So we've got these previous lows from this period here, which is between sort of March to April. Then we saw this pullback and then another retest into this level around the end of April, early May, and then another test of this level again in the last few sessions. So this is a pretty significant area of resistance, and unless we can break through it, the chances are we may see continued choppiness and potentially a pullback again towards this kind of rising trend line that we've got in place here. So pretty choppy stuff. Obviously, if we do see a break above this 61.8% fib level, then we can start maybe targeting a move to the 78.6 in the short term, and then potentially into this big area of resistance above between 138.27 to 138.62. Let's take a look at the intradays there, see if there's anything shaping up ever so quickly. Let's just get rid of these drawings. So we can see here that prices are correcting lower in the short term, and potentially some sort of continuation pattern, maybe. A little bit difficult to call, to be totally honest. We can see that there is some support here. This previous swing high from the 15th of May, we've seen a nice pullback into that level. So if anybody was looking for a short-term buying opportunity, then maybe buying pullbacks towards that 135.67 level could pay off. But in terms of the upside, it is likely to be limited given we've got this major resistance here at 136.47. Let's take a look next at Aussie yen. So this is into an interesting level. We've seen a corrective channel take shape over a number of weeks now, which started back in March. We're now approaching a downtrend resistance line as well. We've been unable to get through that level as things stand. We did have resistance here at 91.29, but we're above that, so let's get rid of that. Potentially some resistance in here around 92.36. We can see a couple of attempts at trying to break through that level and so far have failed. As things stand today, we are engulfing the gains that we posted yesterday, which is pretty negative for the short-term sentiment, but it's still very early in the session. Ultimately, though, for me, it looks pretty bearish in the over the medium term. In the short term, clearly we're seeing the price continue to move higher in a bit of a bullish channel, but there are a couple of resistance levels above that we need to consider. What's the next one? Sterling yen. Let's take a look at that. So sterling yen trading in a nice upward trend at the moment. We posted a bit of a continuation pattern here, broke through that to the upside, also taking out these previous swing highs from back in October, pushed through that very nicely. Big bullish candle that we posted on Friday, a bit of indecision yesterday. Volumes were a bit lighter because there was no US trading and UK trading. But as it stands at the minute, we're in a bit of a pullback mode, down by almost 0.25% today. But it's likely that any pullback will be limited to this previous resistance area, which should now be support. So anything into 172.13 to 172.33 may provide a short-term opportunity to buy, as this is looking pretty strong over the medium term. So yes, looking pretty bullish on sterling yen. My upside target would be a test of this level here, which is 174.88, and we have to go all the way back to 2015, 2016 to see when that level was last relevant, but that may provide some resistance in the short term. Okay, that's it for the requests. Steve, do you want to kick us off with indices?
Yeah, sure. I'll take a look at FTSE first. This is overall, we saw quite a bearish week last week in FTSE. Broke down below the support level we had formed around about the 76.85 level. Closed well below that, and looks to have put a nice rounding top formation in there. You could draw what looks like a head and shoulders formation. Neckline is all the way down here, so it's a long way to go, or more like a double top formation. So, but yeah, yesterday's downward week was pretty impressive. On Friday, we did have a bit of a rally, put in a bullish outside candle, but price action today has pulled back on those gains. We got up and closed around about the 76.39 level, but trading 30 points lower than that at the moment. So slightly on the back foot. From a short-term perspective, we're below the 4-hour cloud, so still in negative territory in that perspective, in that sort of like trend way. And also the hourly cloud is doing a little bit of a job at the moment at resisting the advance. This last hourly candle is looking pretty negative at the moment. Similar sort of price action in DAX. We're above the 1 hour Ichimoku cloud. Actually here we found a little bit of support coming in at 15,920, and the resistance above just under the 16,000 mark, and above that we've got 16,083 acting as resistance. The short-term basis, we bounced off the bottom of the hourly Ichimoku cloud on the EU50, but still under a bit of pressure, forming a bit of a bearish outside candle there on an hourly basis. The 4-hour candle, the 4-hour chart is still in negative territory and looking a little bit weak, as does the daily chart, forming this bearish sort of dark cloud cover, or this bearish candle on from Monday's price action. And this is a continuation lower today. On the US markets, we saw a spike higher yesterday, then a reversal, and we closed around about where we opened, so formed a bit of a shooting star yesterday's candle. So that looks set for a negative session, and could see potentially further downside there. Still in negative territory on the 4-hour cloud as well, so trending lower from the spike high up to 33,245. Again, looking to break lower. Nasdaq seems to be bucking the trend yet again. On a weekly basis, closed at highs or levels that we haven't seen since all the way back from April 22. So going back well over 12 months, and we're seeing decent levels in Nasdaq. There's nothing seems to be slowing that bad boy down. Hangman candle last week on S&P, and on a daily basis in S&P, we're seeing, let me get the chart up, saw that shooting star candle again yesterday, quite a sort of like a small session, a small range. So we can, plenty of work to do really, but looking quite positive as its cousin, the Nasdaq, is moving nicely higher. Yeah, that's about it on the, unless there's any other requests on the indices, but yeah, that's covered off most of them, Joe.
Cool, nice work. Okay, so let's move on to the gun to the head challenge then. So this is where Steve and I pick trade ideas live on the stream. We've got a live account that we're running. A couple of basic rules that we must follow with this particular challenge. We must have stops and targets on these ideas. We must have risk reward ratios that are 2 to 1 or better. So for every $1 we risk, we must look to make at least 2 as a reward. The trades are closed at 9 p.m. UK time unless the stops or the targets are reached in the meantime. That just means we don't need to carry anything overnight or incur any additional fees. And from a trade management perspective, we risk 1% of trading capital or less on these particular ideas to limit any particular damage from losing trades. So we can follow how these are going on our trading account. Let's just have a quick recap of Friday's trade. I was selling gold and looking as though it had broken down from a bit of a range. We rallied into retest the neckline of this range, and that's why I was looking to sell. If we click the play button, we can see at 9 o'clock, which was here, the trade was onside. Certainly not at its best levels of the session that it got to, but still onside. So we'll take that and try and build again on that today. So in terms of the account, Steve, I don't know if you can actually bring that up. You've got it on the screen there? Yeah.
Yeah,
So our balance is at 1,965. We started off with £2,000 at the start of 2023. So we've had a bit of fun, but all in all, we are slightly down from where we started, and obviously keen to turn that around soon. Just need a decent run of winners. You can see there the gold winner, that was £9.78 that was secured. So let's go again today with a new idea. I've got one ready while Steve takes his phone call. I'm going to take a look at Aussie yen today. So this was mentioned by Ali, who was looking for me to take a look at this on the charts to give an opinion. So I was looking at this on the daily. We can see there is a downtrend in place here. In the short term, we've seen a corrective channel form. Some resistance has formed around 92.36, and if we look at the candles in and around here, they've been pretty choppy and pretty sideways for a period of time. As today stands, we are engulfing yesterday's gains that we made. It's still a long way to go on the session, but it's under a bit of pressure to start today. So I'm going to take a look at selling this. This is the intraday chart. This is the hourly chart. We can see here a bit of a range, potentially a double top formed here, but then we rallied straight through that neckline without much regard for it. But in more recent times, potentially another little top pattern forming here. We've broken down through support at 91.59. That's now acting as resistance. So I'd like to sell Aussie yen, Steve, if you're able to help me out with that.
yeah.
With a stop loss at 91.84. That's above the spike that we posted between 7 and 8 a.m. today. So there's been a big push to the upside, big rejection. So I want to put my stop loss above that level, and I want to target and move down to these support zones that we've seen between the 24th to the 25th of May. That's down at 90.77.
Okay, 91.84 stop, 90.77 target.
Yeah, so two
2.5 to
about
1.
two perfect.
Lovely.
So
That's on.
Steve's got that on. We can see that now, order placed. So yeah, hopefully, Steve, you've got something up your sleeve today as well to kick us off
Yeah,
this week.
I mean, we've just bounced off the support here in gold, but I still feel there's a bit more to the downside here. I think we're trading right on the support level. So it's either this or selling EU50. So I think I'm going to go with gold, getting short of gold. We had this spike up from Monday's close last night to Monday's reopen in the markets. The market closed early, bank holiday shenanigans going on there. And I want to sort of target a move down to around about that 1900 level, really. That would be the ideal target level. So we'll adjust the stop accordingly. Let me get the order up. Sell, we want to do it. Can we sell 1%? Stop around about that 1947 level and target a move to 1901. Gives us about a 3 to 1 risk reward ratio. So getting short there, it's risking just under 1%, risking £18.14, targeting a £56 winner.
Nice one. Good luck.
Cheers.
Okay, day ahead. What have we got today out on the calendar? Let's take a look. So we've got US consumer confidence, which is due out at 3 o'clock UK time. Overnight, we've got a couple of bits of data to be aware of. We've got inflation data from Australia. That's at 2:30 a.m. UK time. And also at the same time, we've got the Chinese PMI data. So be careful if you're carrying anything overnight linked to the APAC markets, because there could be some substantial volatility. For the rest of the week, we've got US job openings tomorrow. On Thursday, we've got the US ISM manufacturing index, and on Friday, we've got the non-farm payroll numbers. So plenty this week to keep us interested and potentially create volatility. Okay, nice and short today, Steve, to start the week. Wrapped it up in under
Lovely.
27 minutes. So hopefully everybody enjoyed that and got some value from it. We'll be back tomorrow. And until then, have a fantastic day.
Cheers, everyone.
Thanks. Bye-bye.